Hello traders, Gary Wagner here, just about 10:40 in Honolulu, 4:40 in New York on Wednesday, April 27, 2016. We are looking at the Dow Jones Industrial Average following comments made by the Fed this morning, trading up above 18,000 again, 18,041, up about 51 points. So we closed about 10 points shy of that elusive 18,000, and we're able to eke a close above it, trading up about 0.25% on the day after considering that the Fed came out making comments today that interest rates will remain where they are, and they're pleased with the performance that they're seeing. We'll talk about Fed comments throughout today's show, but S&Ps are currently trading at 2092, up 375 or 0.18% on the day. Noteworthy and something we will definitely want to look at is oil, now trading over $45 a barrel to close at $45.30, up $1.26 a barrel, almost a 3% gain on the day. As I mentioned just a moment ago, we did have the conclusion of this month's Federal Open Market Committee meeting, and from the opening sentences, they describe much of what is in the Fed's collective mind. Information received since the Federal Open Market Committee met in March indicates that labor market conditions have improved further, even as growth in economic activity appears to have slowed. Growth in household spending has moderated, although households' real income has risen at a solid rate and consumer sentiment remains high. Since the beginning of this year, the housing sector has improved further, but businesses' fixed investments and net exports have been soft. We are therefore looking at better and better employment data, but are also staring down stagnant inflation. And so there's that push-pull that the comments really allude to. Economy is on track. It is doing better, but there are some bumps in the road, and there is no rate hike right now. Now, we see this market creeping up again, but nonetheless, it was a tepid move at best. We still have some really solid resistance at 2100. We're at 2090. This, of course, is the E-mini, and we've seen headwinds come in very recently. We've seen headwinds come in last December, but those headwinds last December signaled a small sell-off followed by a lower high, and then our large sell-off going into what we commented on was this W formation, which really fixed our bottom or the lows that we achieved at the beginning of this year when the market was trading at around 1800 on the Standard & Poor's. We're quite a ways away from that at this point, a good 200 points. And the key right now is that we're moving on to 300 points as we approach 2100, but I am going to stand pat. I'm not going to recommend a position in the Standard & Poor's unless we break above 2100. We'd go long. If we come into this area and we see a lot of headwind once again, it might be a good short opportunity, but for right now, I do want to hold pat. So traders, crude oil yet is another story. As I said, we have just been creeping up. We're now trading over $45 a barrel, $45.37, up about 3% on the day. On a technical basis, when we look at our charts, we don't really come into any headwinds or real resistance till we hit about $48. When we look at some of the support areas, we've clearly taken them out, this being 42. My sense was we would probably find some real resistance there. You can see we did have headwinds here, we did have headwinds here, but we have solidly broken above that. And as I said, on a technical basis, this market could go as high as 48. Now, there is one technical study that does give us a reason to believe that we could run into some real headwinds, though, in this area. As I said, I was looking at these tops up above 48, and I've converted it to a weekly chart, and you can see these are sitting at around 50 right here. But when we look at this weekly chart and we look at the highs that we're sitting at about 112, which is the highest that the market really hit, this is through 2014, 2015, before heading south, and then we look at the various fib levels. The first level is 40 584. It is our 23% retracement, and lo and behold, we do get a match there. So if we do see some headwind come into the market on a technical basis, it might be due to the fact that this is an area we could find some resistance. We'll have to see how it unfolds. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review in trending markets. Bye-bye.